Okay, everyone. We're going to do problem 4-8 from your textbook. First, in the 2011, Fayette recorded the following transactions for budgetary purposes. The city reports encumbrances in the expenditure section of its budgetary comparison schedule, but excludes expenditures that are chargeable to a prior year's appropriation. Okay, so first, in we've got this list of estimated revenues here, and we've got our list here of appropriations and the changes in fund balance, budgeted increase in fund balance, which of course is the difference between the total estimated revenues and the total appropriations. So first, this one's easy. We did this last module. You're just going to record the budget. You're going to debit estimated revenues, which again is backwards from what you're used to with revenues. And you're going to credit appropriations, and your difference there, the 81,000, is your increase in budgetary fund balance. Okay, and of course we're talking about a budget here, so for government-wide purposes, the government-wide journal, it is not required. There's no entry required here. On this first problem only, I'm going to show you kind of what the subsidiary ledger, the whole concept of the subsidiary ledger that you will see in your Smithville application. And what we have here is whenever you select this estimated revenues account, almost a new screen is going to pop up, which is where you're going to make your detailed entries for what items are making up this number of 2.774 million. And so here you can see it's all debits because you're just making an entry to this this master account here, this master total. So it's all debits in your estimated revenues ledger. Later on, when you close out the year, you'll close the budget, and it will also pop up, and you'll credit these amounts so that at the ending balance is a zero. You always have a closed out budget, so all the budgetary related items, except for the encumbrances accounts, will have a zero balance. So you've got these totals here that make up the 2.774 million. Same thing with the appropriations ledger. You'll have an appropriations subledger here, subsidiary ledger, and so you just post your totals, your individual amounts that are listed here, down here, and that'll give you your 2.693 million that flows up here in a real ledger. Okay. Problem number 2, we're talking about encumbrances again. Remember, encumbrances are kind of placeholders in the budget until you actually get a bill. And so if you're ever looking just at these budgetary accounts and you're wanting to know what your true budget standpoint is for the year, for the end of the year, and you've got some things that you've ordered, and you want to, let's say it's getting to be 2012. It's about to cross from 2011 to 2012. You got some things that are ordered, but you haven't received an invoice for yet. You would want to have those reflected in your budget to actual schedule. So your budget to actual schedule, remember I showed you last semester, last module, has the estimated revenues and then your actual revenues, your estimated your appropriations, and then your actual expenditures. And then this is a placeholder. It's kind of something to show that you've ordered something, but you haven't received the invoice, so it can't be reflected as an actual expenditure yet, but you still want to show it in the budget. So this one's easy. Again, you would get a subsidiary ledger that pops up, so where you would enter all these specific amounts, but when you're recording an encumbrance, you're debiting encumbrances. So you see here we debit for 931,000, and you always credit encumbrances outstanding. And again, we're talking about a budget here, so there's no entry to the government-wide journal. This one is kind of easy. It's number 3. The current year's tax levy of $2,005,000 was recorded, and uncollectibles are estimated at $65,000. Again, you're debiting taxes receivable current for the $2,005,000. You're crediting estimated uncollectible current taxes, and revenues is your balance there. And the entry, as you'll see, looks very similar to the general fund transaction when you're recording it in the government-wide journal. The entry is almost the same. You've got taxes receivable current with a credit to both estimated uncollectibles and a credit to general revenues for property taxes. All right, in this one, you've got tax collections from a prior year's levy, so you actually got the cash in, totaled $132,000, and the current year collections totaled $1,459,000. Here you're going to record your total cash received, which is the $132 plus the $1.459 million, to get your $1,591,000. And then your two credits here, you'll have two separate accounts, one for delinquent taxes receivable and one for current taxes receivable. You'll run into a Smithfield problem in your Smithfield application where at the end of the year you'll do a reclassification, which basically is going to take anything that's left in taxes receivable current, which in this case would be, let's see, if I add this number, let's just take this as an example. This number of a positive $2.5 million netted against a credit balance of 1.45. So it's saying we have $546,000 left in our taxes receivable account. If nothing else got collected on that at the end of the year, what you're going to do is reclassify that to the to delinquent property taxes, and so you would then credit taxes receivable current for the 546, and you would debit taxes receivable delinquent at the end of the year. And so that's kind of what you look at a transaction in your Smithfield application. I don't think no, there's not one in this problem. So anyway, you see the government-wide side looks very similar. Almost identical. It is identical. You're dealing with a bunch of balance sheet accounts. And again, these account numbers that you see, I'm using the Smithfield application account numbers. So if that helps you any when you're actually doing similar problems in the Smithfield application. All right, number 5, personnel costs were charged to the following appropriation amounts in the amounts indicated. Encumbrances were not recorded for personnel costs, and so since there's no liabilities that currently exist for withholdings, you can ignore FICA and the other withholdings. Expenditures charged to miscellaneous appropriations should be treated as general government expenses. All right. So this one we are just basically recording the expenditures and associated vouchers payable. And it may seem confusing because it's talking about personnel costs during the year were charged to the following appropriations in the amounts. So when you see that word appropriations, you think, oh, whoa, we're recording more budgets. No, we already recorded the budget earlier. I don't know why they're, making this unnecessarily confusing. Sure, I think you'll probably find a few more examples of that in your textbook. But anyway, you're recording an expenditure here. Because they're saying personnel costs were charged to the following appropriations, not that. So they were charged to the following line items of the budget, and it's not saying that you're recording the budget. It'll tell you, it'll say the legislature passed an increase in the budget, blah, 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 if it wants you, if you're supposed to be messing with those budgetary accounts like appropriations or estimated revenues. So anyway, this one's easy. You're just recording the full amount as a payable because it's saying it was charged. It wasn't these bills weren't paid yet. So you've got a debit to expenditures for about 1,750,100, and a credit to vouchers payable for 1,750,100. And it looks almost exactly the same on the government-wide journal. Okay, and you're going to notice that a lot in your Smithville allocations. A lot of these transactions are going to look the same, and the instructions for each module, they give you a pretty good hint as to what you're supposed to do on this government-wide side. Okay, and even the cases where you're not supposed to record anything at all. So just be sure to read the full instructions for each one. Number 6, invoices for items ordered during the prior year were received and approved for payment in the amount of $14,470. Encumbrances have been recorded in a prior year for these amounts in the amount of $14,000, and the amount chargeable to each year's appropriation should be charged to the public safety appropriation. Again, it's saying, when you're recording the expense, you should record it to expenditures public safety or expenses public safety. And again, we're not going to drill down to that detail whenever we're doing these problems, but that's where that subsidiary ledger comes in, because that's where when you put in expenditures, the subsidiary ledger is going to pop up, and that's where you put in expenditures dash public safety. Okay, so you can see in this first part of the problem, we're removing the encumbrances that it mentioned, which is $14,000. So when you're removing an encumbrance, you are debiting encumbrances outstanding, because when you originally recorded it, you credited it. Ditto for encumbrances. You're crediting encumbrances for $14,000 because when you originally recorded it, and again, it's saying this happened before this problem started, you are crediting encumbrances because you originally debited it. Again, dealing with a budgetary item on this first part, so no entry required in the government-wide journal. Expenditures, again, whenever you see the word invoices, and you're wondering, all right, which one am I messing with encumbrances here, and which one am I messing with expenditures? And the word invoices should clue you off. You're talking about an actual expenditure. You have received the bill. It's not just an order you placed. It's not just your intention to buy something. You've bought it. You just, the only thing left to do is to pay the voucher. Okay, so you're recording your actual amount here for the invoices received of $14,470. You're debiting expenditures, and you're crediting vouchers payable. Government-wide journal looks really similar. You are debiting expenses, and you're crediting vouchers payable. Okay. Number 7, invoices were received and approved for payment for items ordered and documents recorded as encumbrances. In transaction 2 of this problem, the following appropriations are affected. All right. So it doesn't specifically tell you this, and which is a little confusing to me, because if it's possible to have an estimated liability of $71,000 in translation here, this is encumbrances. This is what you've had as your encumbrances already recorded up top, right? Let's go up there and make sure. 851,200. Oh, right. So I see. So it's saying that we recorded 931,000 up here, but what 931,000? What this problem is saying, though, is that it is showing you the problem above represented kind of X amount of orders for these following departments. Well, what this is saying is this is only a portion of these orders have been filled, okay, and we've received invoices for those orders. So if you go back up here and look, 71,000 miscellaneous appropriations, that's the only one that is being filled. And why am I scrolling up and down? I'm sorry. Let's copy and paste this down so that we can see here the let's see here. And from problem 2. As you can see here, these are the only ones. Oh, what happened there? Oh, the bottom one is the only one, the only encumbrance that has been completely satisfied. The rest of these still have orders outstanding. Okay, so the first part of this problem is to remove the encumbrance that are attached to these. And again, you'll have a subsidiary ledger that pops up, but basically all you're doing is taking this full 851 or this amount 851,200, and you are again debiting encumbrances outstanding because you credited up in problem 2 when you recorded it originally, and you are crediting encumbrances because you debited it up above. Okay, let's see. Let's do a real sum here so that these, so there's our original, here's our difference. So this is what would be left in the encumbrances outstanding account, which would again show you on your budgetary schedule that you've got $79,800 still out there that's not quite an appropriation yet because you hadn't got an invoice for it, but we have ordered it. Okay. Now, here's the easy part. All you're doing is recording the actual liability, the actual bills that have come in, that have been approved for payment, of $850,500. You're debiting expenditures, crediting vouchers payable, debiting expenses, crediting vouchers payable. Okay. In the government-wide journal, sorry. Government-wide are these yellow lines here. No entry required because again you're talking about budgets. No entry required on the first part, but on the second part it looks almost identical to what's recorded in the general fund. Okay. Revenue number 8, revenue and other taxes collected during the year consisted of licenses and permits, $373,000, intergovernmental revenue for $400,000. And $66,000 of miscellaneous revenues. And basically this is saying that for purposes of accounting at the government-wide level, the intergovernmental revenues were operating grants for public safety. Miscellaneous revenues aren't identifiable with anything and therefore are just recorded as general revenues. And the remaining one, the license and permits of $373,000, it didn't give any type of note here for that because it's recorded the same way in both ledgers. Okay, so again, not drilling down on the revenues here to the subsidiary ledger, so you're just totaling everything up. But again, in your Smithville application, it will ask you to drill down and differentiate these 3 amounts that it gives, and I differentiate them here in the government-wide journal. Again, to kind of show you because in the government-wide journal, you'll notice in the application there is no subsidiary ledger, which is what you may be used to in your if you're out in the workforce, maybe what you're used to anyway, not really having a subsidiary ledger for each type of kind of major account. You just have 6 different accounts for the for the different types of revenues. And that's what we have here in the government-wide journal. You're debiting cash just like you did with the general fund, crediting program revenues for public safety for $400,000. And actually, I thought there was a better account for that. Maybe not. General revenues. Okay. Again, I'm trying to use the Smithville accounts here to kind of help you a little bit so that it might not be perfect. This should say maybe intergovernmental grants or something like that, program revenues for public safety, and not say charges for services, and instead say something like grants, something to that effect. You can see it doesn't recognize what I just typed in there, so I'll switch it back. License and permits for $373,000, again from the problem, and general revenues miscellaneous of $66,000. All this should look familiar to you. It's very similar to for-profit accounting, as is this one. All you're doing here, payments on vouchers payable total $2.505. million. There's additional information as follows. General fund balance account had a credit balance of December 31st. No entries have been made in the fund balance account during 2011. All this is just kind of additional information, not really usable here, except if you're creating a statement. You'll have a fund balance, an actual income statement or statement of revenues and expenditures and changes in fund balances, it's called. You would need to know that beginning general fund balance. But here we have just talking about the first part of this entry, or the only relevant part for this problem. You are just paying off vouchers payable, so like accounts payable, you are just debiting this payable account for $2.505 million, crediting cash. Same thing in the government-wide journal, debiting vouchers payable for $2.505 and crediting cash. So that's it for this problem. Hope this was helpful. Be sure to reach out to me if you have any questions.